All right, let's get straight to it. We're looking at what I believe is one of the single most important investment themes for the next 10 years. This is a true high asymmetry play. And what that means is the potential reward here could absolutely dwarf the risk. We're not just talking about oil, we're talking about the total rebirth of a nation and the companies that are already lined up to lead the charge. This quote really hits the nail on the head. We are talking about a generational opportunity here. Think of it like a post-war reconstruction, but the entire thing is bankrolled by the largest proven oil reserves on the entire planet. The real trick, and where the money is made, is in finding the key players who are set up to capture that massive, massive upside. So, how do you even begin to play a trade this big? Well, we're going to break it down into what I call the two crown jewel plays. We're focusing on the two most critical points in the value chain. You've got the upstream guys who pull the oil out of the ground, and then you've got the downstream refiners who actually turn that crude into cash. And here they are. This perfectly illustrates the two main ways in. On the left, you have Chevron. They're the only American supermajor with actual boots on the ground. They are the incumbent. They are the direct play. Then, on the right, you've got Valero, the undisputed king of refining. They represent a deep value play on what happens when trade gets back to normal. Two totally different ways to win on the same theme. Now let's dig into Chevron, because their position is it's incredible. They have an ace in the hole. See, while all the other majors bailed, Chevron stayed, operating under a special government license. They still have their joint ventures. They have the infrastructure and the people on the ground right now. Think about that. They don't have to figure out how to get back in. All they need is the green light to crank the handle and turn the taps back on. This makes them, without a doubt, the de facto operator for any US-backed plant. Now, let's switch gears to Valero. This is a completely different kind of trade. I like to call it the Michael Burry play, because it's all about a mispriced spread. It works like this. Valero's massive refineries on the Gulf Coast were literally built to run on the cheap, heavy, junk crude that Venezuela has tons of. Right now, they can't get it, so they have to use more expensive oil. The second that cheap Venezuelan supply comes back, Valero's input costs are going to collapse. But guess what? The price of the gasoline and diesel they sell to you and me, that stays high. That difference, that massive expansion in their margins, drops straight to the bottom line. It turns Valero into an absolute cash-printing machine. Okay, so Chevron can't just flip a switch and bring a country's entire oil production back online by themselves. To really get those taps flowing, you're going to need a huge effort from the oilfield service companies. And this is where the game changes a bit. Because rebuilding an entire country's energy sector, that takes serious capital. For these companies, a strong balance sheet isn't just a nice-to-have, it is everything. Which leads us to the critical question for you as an investor. How do you want to play this? What's your risk appetite? Are you looking for the safe, reliable general contractor who's going to get the job done no matter what? Or are you swinging for the fences with a higher risk, higher reward bet? This chart just makes the choice crystal clear. On the one hand, you have Schlumberger. Look at that debt-to-equity ratio. It's a fortress. These guys can fund their part of the reconstruction out of petty cash. They are the safe, institutional play. Then you look at the other end of the spectrum, Weatherford. They're carrying almost twice the leverage. Now, that gives them incredible torque, incredible upside if things go right, but it also makes them way more fragile if things go wrong. It's the classic choice, the fortress or the lotto ticket. Okay, but getting the oil out of the ground and refining it is only part of the puzzle. You still have to get the product from point A to point B. And that brings us to the logistics backbone of this whole trade. And again, you see two very distinct opportunities here. First, you've got to physically move the raw crude oil from Venezuela all the way to those refineries in Texas and Louisiana. That is a pure play on international tanker shipping, and a company like Frontline is right in the sweet spot. Then, once Valero works its magic and turns that crude into gasoline and diesel, you need to get those finished products to the rest of the country. And that's where Kirby Corp comes in. Thanks to a law called the Jones Act, they basically have a protected monopoly on America's inland waterways. They are the go-to for moving fuel up the Mississippi.
So we have all of these different pieces. How do we put them together into a single, smart, institutional quality strategy? Remember, the goal isn't just to gamble on a quick win. It's to build a portfolio that thrives even if this whole reconstruction takes longer than we think. We need a portfolio where you literally get paid to wait.
And here it is. This is how we structure that fortress portfolio. You can see it's anchored with a big 35% position in Chevron, our essential boots-on-the-ground player. Then we balance that with two equal 25% positions, Valero for that cash flow explosion and Schlumberger for safe, reliable execution. And finally, we cap it off with a 15% slice in Kirby Corp for that steady, low-risk logistics piece. Let's just quickly recap the role each one of these plays. Chevron is our anchor, right? The direct political play. Valero is the cash flow engine that's going to fire up when cheap crude starts flowing. Schlumberger brings the muscle with maximum financial safety. They are the general contractor. And Kirby is the boring but essential logistics network that ties the whole thing together. Every single piece is there for a reason and can stand on its own merits.
And that brings us to the bottom line, the objective. This is not a short-term trade. This is a high-conviction bet on a massive geopolitical and economic reset. By building a portfolio of strong, stable, dividend-paying companies that are absolutely central to this reconstruction, the strategy is as powerful as it is simple. You get paid to wait for one of the largest distressed asset recoveries of our lifetime to play out.